Here we go. Real briefly, we'll go over the last round. We'll go over the winner spreadsheet and kind of see what happened and maybe crown an overall champion. Oops. Team Area, $34 million emergency loan in the last round. Sales of only $116 million. That might have been what contributed to the emergency loan. We'll have to see when we look at the inventory figures. That'd be my guess anyhow. Still managed a $16 million profit, though. That's pretty good. Every team was profitable in the last round, and reasonably profitable. You guys let the computer teams do a little better than I thought they should have, but oh well. Kind of surprisingly, we were on a really super trend for contribution margins. I really thought we might end up getting some up in the close to the 60s even, because I think there was one round not that long ago every team was over 40. We really kind of fell back. That's probably, it's not disappointing, I shouldn't say that, but it's probably because of the competition, right? You guys probably started pushing prices down a little bit. I'd have to go back and kind of look at those trends maybe and see what happened. But that's my guess, is you guys probably started pushing prices down because a lot of had already been invested in cost savings. There's already quite a bit of money that was invested in automation and those types of things. Several teams had already maxed out. Lots of money in HR and had pretty much hit the top in TQM. So with all those investments, my guess is it was a pricing thing. Pricing war took place. Oh, look at that. Digby up to $282 stock price. So what did the stock prices start at in the first round? Anybody remember? 18. So less than $20. So we could have in 8 rounds, 8 years, did 14 times our money, not counting what they paid out in some dividends. And in this round, they paid out a $29 dividend. So that would have been a pretty impressive investment. But again, we're talking about a very rapidly growing industry. So, okay. That would have been pretty good. You'd have done actually pretty well with any team, right? In 8 years, if you could double your money, what kind of return is that? If you double your money in 8 years, anybody remember from finance? I thought I taught you guys so well in finance. If you double your money in 8 years, rule of 72, you had a 9% return roughly, right? Okay. Bonds, let's see here. Yeah, not surprisingly, we see some money, cash flow coming back in because people disposed of excess capacity, did those types of things. Andrews, the computer team, didn't know what the hell was going on, so they were still investing, thinking that the game was going to go on. They didn't know any better. Teams bought back. Probably maxed out would be my guess. Is that right, Digby and Erie? You guys probably maxed out on what you could buy back there this round, yeah. Paid off some long-term debt, paid off some current debt. Unfortunately, Erie didn't wisely incur some more current debt. Oh, I was going to look at inventory. Yeah, your guys' inventory didn't go up that much, so inventory wasn't really the big cost for the emergency loan. Was it just poor planning, or?
Yeah.
Okay. Yeah, because that's a big emergency loan, so it was kind of a surprise. I would have thought it would have been an inventory thing, but and you're sitting on a decent amount of inventory. Maybe you thought you were going to sell some of that you had left over from prior rounds, and it didn't get gone. Even that, though, had you sold all of it, it wouldn't have been enough. Still, actually, we finished the game with lots of capacity. Lots of expensive capacity. The one team, Digby, probably the only team that really used their capacity and did so. Yeah, Chester, yeah, you guys pretty close. You guys used everything? Okay. You were giving me that dirty look, so yeah, I thought I'd better take another glance. But, okay. And certainly Digby had the highest stock price at the end and probably generated the best returns throughout. I'm not crowning them the victor necessarily yet. We'll take a look. So. Inventories. Yeah, Erie was still hanging on to quite a bit of inventory. Kind of looks like maybe they didn't jump on the pricing bandwagon and got stuck a little bit. I mean, you look at cake in the low end was selling for $14, sold out. Only 28% contribution margin. $17 for Baker, sold out. And Ebb, on the other hand, was $18. So it ended up having quite a bit left in inventory. So it did look like a pricing. We had a little pricing war going on, and Erie didn't join the party. I'm just going to scroll through some stuff pretty quickly here. It didn't look like we had a lot off in terms of potential versus actual. That's a pretty good perceptual map there. That's pretty good disbursement, pretty good placement. You know, you get to the end of the game and there's nobody that's out of whack at all. You know, every product here is really positioned pretty appropriately, you know, for the game. You'd expect 8 and Cat probably had drifted from the high end back into the traditional end, would be my guess, and would have continued to do so. So pretty cool. HR, we had some big numbers in HR, up to 26%. It certainly contributed to their 51% contribution margin. TQM, not a lot. Again, Andrews and Ferris, they didn't know the game was coming to an end, so they went ahead and invested a little bit more money in TQM, but really just kind of, in Andrews' case, kind of catching up. In Ferris's case, they got a long ways to go yet to kind of get caught up, so should be it. Shoot. Okay, let's take a look at any guesses? We know Erie. Now, you know, it's kind of interesting. Erie did have the highest ROE. Okay, 47%, so we know they're going to win that one. And ROE for Digby was the next highest, 42%. Those would, you know, if you were investing and you were looking at a company, you'd probably say that's kind of unsustainable in real life. Okay, I don't know too many companies that have an ROE that approaches that kind of a level that's able to sustain that over time. You know, competition comes into play. You know, if somebody's getting that kind of a return, you know, people are going to show up to the party and want a part of that. So generally speaking, it'd be interesting to go and see if I could find some that, you know, have sustained that over any particular period of time. Earnings per share, though I'm pretty sure Digby, oops, where'd I go? Earnings per share, yeah, Digby, $38, so, you know, 3 times as much as their next closest competitor, 3.5 times as much as their next nearest competitor, which was also a Team Erie, so pretty darn good earnings per, oh, I'm sorry, Team Chester. It's an eyesight thing, Josh. It's just an eyesight thing. I'm getting old. My eyes don't work. Still, my 3.5 times is about right there. So, okay, so pretty good victory in terms of that. Yeah, let's just go take a look then at the. Earnings per share, Digby, ROE, Erie, contribution margin. Actually, Andrews had the highest contribution margin, just barely, if I remember right. But Digby still did pretty well there. Look at that. Team Erie had the, sorry to pick on you guys, man. That's what happens when you leave, Whitney. You let Jedrick by himself, you know, and Kurt, of course, probably had some input. But, you know, you leave the guys, you know, in charge and you're gone, off playing golf. And look what happens. You know, they get emergency loan, high leverage, lack of working capital. You just can't leave guys alone like that. I'm telling you. Huh? No. Yeah. So if everybody in this class has learned one thing, you know, in this semester, there it is, right? Don't leave guys alone to make these kinds of big decisions. So. In this round, Team Digby again. Okay. So who would I crown as the overall victor? I know it's probably going to be a big surprise, but I probably would pick Digby. Probably. Okay. They return the most to their shareholders, both in terms of share value, but also a little bit of stock buyback, not as much as Team Erie. Team Erie had some good share buyback, which is return, okay, to shareholders. And dividends in the last round, Team Digby had a big dividend. I don't think they paid too much dividends otherwise. Team Erie had paid some dividends, I think, otherwise, if I'm not mistaken. But I'd have to go back and kind of look. So, all right, your assignment. I didn't type this one up. Okay, I'm just going to give it to you verbally, so listen closely. Okay. Tell me why your team was a loser. Okay. Now, that I want about a page. You know, I'm not very interested at all in, well, Johnny on our team was a son of a gun, and he wouldn't let us do the things we needed to do, and so that's why we sucked, okay? I would prefer to have information that goes to the game itself, right? Now, I can understand maybe a round or so where something went awry and you need to point that out, you know, because, you know, Johnny was supposed to check the decisions and he didn't, and we got kind of screwed up maybe that round. Although I don't know that a lot of that happened in this particular game. You know, you could point that out, but that should only take you about a sentence or two, right? So I'm interested in what the financial and those types of things that happen. Okay, I could see you. You know, you could divide or position your paper either maybe chronologically by round. You know, this is what we did good this round. This is where we didn't do so well in this round. Or you could do it just by, you know, areas and whatnot. You know, maybe we did a really poor job at marketing. You know, the whole, so you'd have marketing, production, finance, and what's the other one? R&D. Okay, and so you could divide it in, or you could make your paper either of those two ways if you'd like to. Okay, one page, right thereabouts. Okay, don't go overboard. Don't give me a 5-page thing that I have to try to correct. Okay, but on the other hand, don't give me a short paragraph, you know, again about, well, we sucked, you know, and couldn't get together and those types of things. So, okay, everybody kind of have a pretty good understanding of what that is then? Okay, there are 4 people that have completed the CompXM. There are another, 6 people that have started the CompXM. That means that there's still a pretty good handful of folks that haven't yet started on the CompXM. They're registered, but they haven't started, okay? And there may even be a couple that have yet to register. So that's going to be due, you know, next week, okay? My advice again is don't put it off, don't put it off. Try to get started if you can on that, so you at least kind of know what's going on, and that way if you got any questions, you know, today'd be a good day because there's some people here maybe that'll still be around that could answer some questions and whatnot because they've already started and they've done a round or 2 or 5. Okay, so today'd be a good day to start asking some of those questions. Anybody have any overall questions? Questions about the assignment? Okay, I'm done. Congratulations, Team Digby.